Welcome, Michael. It's a
Thanks,
pleasure to
Gary.
have you here. Thank you so much. This is hopefully going to be a series of little snippets around to do with angel investing across Northern Ireland. We're going to hopefully share these on YouTube and snip them up as well. So I really appreciate your time. Thank you.
Okay, no problem. Happy to help.
Okay, so today we're going to talk a little bit about your journey and how you got into the world of angel investing. But maybe if we step back and talk about you. Let's talk about your background first of all, how we got into the technology scene, the startup scene. Just bring us a little bit of life to your story.
Sure. I'm happy to share that. I've told this story a bunch of times to various people. I trained as a chartered accountant and with PwC, or one of the bigger firms. And back in 1997, which will give you an indication of just exactly how old I am, I should say I trained in a provincial office, the office in Portadown, which is hometown for me. And as you would imagine, a mixture of small businesses, local manufacturing firms, nothing solid, salt of the earth, if you like, type businesses, but nothing like the world where I have the privilege to spend a lot of time in right now. And I ended up doing some project work with a company I'd never heard of, but I was just blown away by what they did. That company's long since disappeared, but it was called BCO Technologies. The clue's in the name. And I'd never seen a business in Northern Ireland whose customers were the who's who of the semiconductor industry. Siemens, Hewlett-Packard, etc. in Germany, in San Francisco. And it just blew my mind that a company like this in this little tiny part of the world could actually be on a world stage. Because I'd grown up in Portadown, a pretty small town, and that project finished. And 9 months later, I somewhat randomly got seated on a seat next to the chairman of the company on a flight to London. And by the time we landed, I had agreed to leave my job in PricewaterhouseCoopers and join the firm as the CFO.
Wow.
So that was how I got into this world of technology. And suddenly realized that I was playing with live ammo in many ways, because in a cocooned world of working for an accountancy firm, you're not really making any real world decisions that have a real world consequence. So that was a big learning exercise for me in terms of what being actually in a business of that size, there's about 200 people or so, actually represented being in the CFO's chair. So I had a heck of a lot to learn. I was thrown into the deep end and was somehow able to swim to the side and hang on. And that company ended up being acquired by an American semiconductor company about 3 years into that journey. But it kind of wet my whistle, if you like, of this whole world of technology. And there wouldn't even have been what was called a technology sector in Northern Ireland at that time. It just didn't exist. We're talking about the time of the Good Friday Agreement in and around that sort of era. Northern Ireland as an equity landscape, wasn't even called that then, didn't really exist. There was a small fund called Enterprise Equity based on the Dublin Road. They happened to have been an investor in BCO Technologies. And one of the other investors in that company, they asked me, would I get involved in another portfolio company of theirs? And the rest, as you might say, is history. That got me into this world of high ambition, high growth, high risk business startup. And I just found it was really enjoyable.
Amazing. It's great to see. I didn't actually know that about that trip on the flight. That's fantastic. Such a Northern Irish thing.
Yeah.
So it is. It's phenomenal. Okay, so you've obviously been involved in a lot of companies as well to date. What was the trigger point for you saying, okay, I've been CFO, I've been involved in the companies, but now I want to actually start angel investing? Take us back to that first moment.
That first moment came fairly shortly after the BCO experience, because I didn't leave my role in PwC to be, a factory manager, which is what the BCO business became. So I was looking around for the next thing to do, and some of my colleagues from PwC said, "Hey, there's this little software company over here. It's raising some capital, needs some leadership team. Would you be interested?" So I signed up there and I invested in that business. Yeah, so that was the start. But then very much from an angel investing as a career, that really didn't. That was the start, but it was quite a few years after that I started to become investing in more companies. And so for the first kind of 6-7 years after that, I might have invested in 2 or 3 companies, but I've become a lot more active in the last 6 or 7 years since I kind of finished my executive level career, if you like. I was involved in a number of local companies after BCO, Epona being a big part of that, and then Clavis in Dublin. I chaired Total Mobile, which is a fantastic business right now. It's gone on since the early capital raised by Colin Reid and the guys from MMC Ventures and 3i. So I kind of came out of being an executive and moved more into a non-executive type career 6 or 7 years ago. And that's when I started to do more on the angel investing side. So over that time period, I've invested in about 12 companies. More than half of those have been in the last 6 or 7 years.
So the early stage of the angel investing before we kind of ramped it up, did we learn anything in that market? Because obviously that was a different time period.
Very different time period.
So what did we learn as moving into ramping up our angel investing?
It's not a solo sport. I learned it is a team sport. The things that you learn around and I've never started a business myself. I hold my hands up. I don't consider myself an entrepreneur. I like to think I help entrepreneurs along the way, and that's what I think I do. It's certainly what I enjoy doing. But the things you learn are, well, you just have to learn them along the way. I've come to figure out, to spot the sort of patterns that have a greater probability of success. This is high risk by its very nature. Some of the things that stand out are investing in a team versus a solo entrepreneur is a very strong indicator of what's likely to have the greatest chance. There's just simply too much work to do for any one sole founder to actually do that. And then if you've got to build a leadership team who don't know each other before, that's a massive challenge. It's often underestimated how hard that challenge is. So people who are forming a team who've actually had a track record of working together is actually a very solid indicator of a team that's likely to figure out the path to success. Because actually the other big thing that I've learned, albeit in a small number of data points, is quite often it's not the initial idea that turns out to be the business. So one of the things you're looking for is a group of people who are smart enough about a space that even if their first idea isn't exactly what the business should be, they can actually figure it out as to what the real business opportunity is. And there's some fantastic examples of that, around this town. I'll not name any specific companies, but I missed out on a company whose initial idea I just didn't get, but they actually figured out what the business play was in the space that they were aiming at, and now they actually announced a transaction pretty darn recently, and I'm delighted. It was a husband and wife team, and I'm just delighted what they've been able to achieve, albeit cheering from the sidelines.
Fantastic. Okay, so if we draw on a little bit of the portfolio you've built, right? So you've mentioned team there, the ability to pivot, the ability to work together is so critical. I massively agree.
Yep.
The founder piece is so big. Is there any other core themes now that you if you stand back and look at the portfolio across the board, is there a recurring theme for you that you see from a sector specific or whatnot?
They're not sector specific. Gary, I'll maybe turn this off. It inevitably always takes a lot longer than people think to actually build a business. And that's a lesson for the entrepreneur. And I know you highlight that point very significantly on the program, and the other programs make that point too. It's not that people are doing anything wrong. It's just if you're bringing a brand new concept to the market, sometimes it can just take a period of time for the market to figure out, yes, actually is a good solution and I should adopt it. Yes. People who are being sold to as customers already have busy careers. Just to find time to pitch them your new product, before you know it, that meeting is 3 weeks away. Yep. It's not tomorrow. So it always takes more time, and inevitably it always takes more money. the thing I've also realized is success means you'll be investing more. It's rarely one check investment. It's more commonly at least 2 or 3. And that's actually what good looks like.
Yeah.
Because again, what's not really well understood by most entrepreneurs is the amount of money it actually takes to really build, in particular, the go-to-market function.
Yeah.
And that's a challenge for many technically orientated founders because they don't really have a sense of what does this whole sales and marketing area actually look like? What does good look like? What does achieving high growth actually look like in terms of the amount of money to be invested? So if there's a pattern, if I could call it that, Gary, it's that startups in general underestimate how long it's going to take and crucially how much resource they need to be thinking about planning to invest in the go-to-market function. I try to highlight that with the founders that I work with by highlighting to some examples. Even the best companies in the world, and you'll have seen me highlight this on some of the workshops in your program, some of the best companies in the world invest $2 to $3 on sales and marketing relative to $1 on product development. And that's a real mind shift for people to wrap their head around.
I think it's a very key piece of information, specifically actually an angel investor doesn't think about, is they all think it's that one ticket, one hit that you just highlighted there. Maybe want to drill into that a little bit more.
Yeah.
So if you are thinking of angel investing, what advice would you give to someone that maybe has that mindset that it's the one ticket, the one hit? Because I've met maybe in the past couple of weeks of saying, I'm just going to do this one company. I'm going to put all into this. And we both know there's power law, there's lots of data points on spreading portfolio and whatnot. What advice would you give to and specifically to an angel investor?
Specifically perhaps to a first-time investor?
First time.
I think it's talked to a lot of people who actually have done this before. You have a great network. I have a network I'm happy to share with anybody who's thinking about angel investing or thinking about it, and just get some of their experiences of some pretty fundamental things, such as the amount of capital it'll actually take, that consistent underestimation of to how much capital it takes to be successful, and become part of a team. I've been a solo angel. It is not a pleasant experience if things aren't going well, because you feel actually under considerable pressure to keep investing. So it's very important to become part of a team. Start small would be a good idea. And if somebody's only thinking about investing in one company, you better be prepared for, statistically, that might not be a good outcome, because it is high risk for a reason. I got an email today from an EIS fund that was seeking to raise some capital, and in big bold letters at the top of the email it says, do not invest unless you're prepared to lose all of your money. That's the standard FCA health warning around this asset class. It is high risk, potentially high reward is the other side of that, but it is the ultimate. You need to be investing in 10 or a dozen companies to get 1 or 2 winners. That's kind of a rule of thumb in my experience.
I think the peer-to-peer learning is so key. So it is, especially even on the founder side, having that conversation with other founders to learn about angel investors or even VCs and whatnot. So I massively agree. So, okay, let's also take back to you probably get a lot of deals sent your way now because you're active in the market, you're actively looking for deals now. Whenever you get a deck across the table, what's that automatic? And we touched on some of this, team and whatnot, but say it hasn't came from, you don't have a conversation with the team and you've only got the deck, right? What are some of those green flags and red flags for you that someone as an angel investor, is learning as well that you look for?
It's an interesting scenario that you outline, Gary, because it typically doesn't work that way. We in Northern Ireland, to be specific, it's becoming a highly interconnected network. It's still not there, but it's certainly a lot better than it was 10 years ago. So the cold deck unintroduced is quite a rare thing.
Yeah.
But in that particular circumstance, it's probably a pass because it's really hard to get a sense of the people.
Yep.
It might sound a bit cheesy and a little bit cliched perhaps, but it's actually the people that the investor, and not just the angel, but the seed funds, they're looking for the people. Are there people here that sound like they know what they're doing?
Yeah.
They're smart enough and they're motivated enough to figure something out, even if plan A, B, and C haven't worked. They still have the juice to go on to plan D.
Yeah.
So the cold deck approach is quite rare. But if I orientate your question slightly differently to say maybe I've been
Say you got a recommendation. Say you got the introduction. Let's do that side as well.
I think that's maybe more helpful. Again, I need to understand what it is. I may not understand the bits and bytes of the technology, but it needs to understand why would a potential customer buy this thing, whatever it might happen to be. If I can't understand that very quickly in an investment deck, I'm not actually going to spend the time searching for the answer. So entrepreneurs should really focus, I think, on really being clear in the communication of who is my target customer and what benefit will they get from becoming a customer for my product or service. Being really clear on that. Help people imagine what the size of the market might be for that. Don't orientate towards, Gartner says my market is worth 50 billion and it's growing at a CAGR of 30%. That means I'm going to be successful. Help people imagine from their own context, imagine how big that might be. Because an angel investor is looking more to try to understand, could this be really big if it worked? Or is this a really, really small market? Now, that's not to say if something's a small market, it's not a sensible investment. But an investor's expectations need to be appropriately set. And sometimes smaller opportunities, perhaps a smaller level of capital, might be interesting to particular investors. So it's really in that deck, if that's the first interaction, making sure either through the deck or in the conversation, the entrepreneur is communicating very clearly and very simply, here is my value proposition or my anticipated value proposition, and here's why I think a customer will buy it. If there's some proof points that there are interested customers out there, that's a plus. Then you've got the bones of potentially a conversation.
I like that. And the reason why I asked you what the cold side was, because again, I had some angel investors who got cold decks, and I was basically what they done the reference check. They went to their network. They said, do we know this individual? So it was kind of reverse. So it was, which is fine. Okay. So you've got a deck across the table. You're really interested. They've kind of got straight to that point very quickly. And you think this is a potential opportunity for you. How do you decide on how much that you want to invest in this company?
We're not past the gate that I want to invest at all yet.
Okay.
So
well, that's good.
Yeah, let's
do
a step
that.
there because for me personally, that's a very important step because from a what do I want to do, and there is a range of roles that an angel investor can play when it comes to the company. The role that I personally get the most from is one whereby I can actually add some ongoing value to the entrepreneur, and the entrepreneur is happy to receive it. Okay, so my personal journey before invest actually takes quite a long time, and I at any one point in time might have 4 or 5 rolling conversations going, where I maybe am happy to meet the founder or the founder team on a monthly basis, check in how things are going, maybe make some suggestions as to what they might want to do. So for me personally, the chemistry is massively important. And I really like to work most with entrepreneurs who think I can add some value to what they're doing. I'm quite happy to be told that they don't think I can add anything. That's okay. That's fine. But I personally don't invest if it's write a check and I'll see you in a quarter with a quarterly update. It just doesn't, it's not what I'm looking for. I'm looking personally for that sense of involvement, helping the company develop what it can be. We'll perhaps come back in a broader sense in a moment or two around the range of different roles that an angel can bring. But overall, an angel should be thinking about not just investing their capital, but actually investing some of their other intellectual capital, their experience. Most likely they've run or founded their own business themselves, and more of the angels who are investing in our market here in Northern Ireland are exited technology founders, and that's a huge plus for the ecosystem. An angel investor also has a huge Rolodex of contacts that they can help the company with. And so they've probably sat in that startup entrepreneur seat and would have wished for somebody that could help them. If just the other day, I was able to connect a company I'm helping out with a few chats with a suggestion that turned out to be the fractional CTO. It could have taken him an age to find that. So if an angel can fast track a lot of things that the company will need to do in conjunction with all the other 100 things every day that need done to grow a business, that's where an angel can add a huge amount of value. And imagine that if you've got 6 or 7 angels involved in the business, the magnification of that effort into the business can be absolutely huge. And another role that an angel, I think, needs to take is, be that kind of critical friend to the entrepreneur. Sometimes, and I think it's a factor of the market that's fading into the background, there was this kind of two sides of the table type model. The entrepreneur and the angels, and they were the angels. It really, you were all, if people are investing in the business, they're investing to become part of the team. They may play a range of different roles in that team, but ultimately they're all motivated to help that company be successful. So everybody's in the same canoe, so they should be rowing in the same direction.
Could we maybe take a recent company that you've went through that piece with, where you've sat down, understood that chemistry piece, and actually brought other angels to the table with you, because that's an incredible thing that can happen for a founder that's going through their fundraise. Can we maybe talk through an actual example of a company?
I'm working with one company at the moment that's in the sports tech area, and the founder and myself have collectively brought more and more people to the table. And in that particular company, it certainly amazes people that have highlighted this before. We've almost 25 angel investors. It's unprecedented in this town, in my experience. And many of them play a very active role in helping develop the company forward. Some are totally happy to sit in the background, and that's okay, because I know they can be called upon if we think there's something that they could add to the conversation, and they'd be more than happy to actually make that contribution. They just prefer not to, I'm not going to say force themselves on the company, but they're very happy to play a supportive role if called upon. Others want to actually feel like they're part of the team and taking the thing forward. And today we've 70 people in the business. The business is 4 or 5 years old. It's growing at 100% a year the last 2 to 3 years. So really a good example of the power of collectively bringing people together that can help a founding team, and also a great illustration of what's possible in Northern Ireland now from an angel investing perspective. It is a highly collaborative setup, and that company also has the seed funds from Techstart and Clarendon. So all of a sudden, if you've got a range of investors, and individually those investors invest sums right across the spectrum. The range goes from, I think, about 20K to over $250,000. And that's a very wide range, but again, an indicator for entrepreneurs out there and also for other angels out there. If you want to become involved in this world of angel investing, actually you'll find yourself in conversations with some pretty darn interesting people. And you'll feel part of a team. And all of a sudden, the risk just doesn't quite feel the same. It might actually be, but actually if you give a company an appropriate amount of capital and the team is right, the team will very often figure something out that turns into a success.
And if we take the same example and we go back to your first ticket in to that company, right? What were you expecting? What are you expecting the outcome to be from your individual thesis?
I'm expecting the outcome to be the founder's going to try their best.
Okay, nice.
You can't ask anything more of people than that. You know, if you don't feel that a founder has it within him or her to try their best to be successful, then don't. You've got to feel that intuitive, that gut feel of, here's somebody who's very passionate about what they're doing. They feel like they have a strategy and a plan that they can execute. Time will tell whether that strategy and plan actually, when it meets the market, can create a business. You can't expect anything more at that point in time when this is an idea in somebody's head than for them to give it their all.
I really like that. I wasn't expecting that answer. I really like that. So
out of curiosity, if I could turn the tables, what were you expecting?
I don't know. I was thinking, from a lens of, this is a potential to be X, and then secondary was the piece on founder side, or
no, for me,
yeah,
cliched as it might sound, it's all about the people.
Yeah.
Do you feel there are people there who really care about what they're trying to do, are really motivated to make it successful? It's an idea on a piece of paper, not much more than that. So I don't think you should expect much more than the founder to try his or her best. Yeah, you have to make that decision in the context of, if this works, this could be a great business.
Yes.
You have a long way to go as to whether or not you can prove if this works.
Yeah.
But in that first check, which is in runway terms, thinking about giving that entrepreneur or their team maybe 18 months to try this out, you can't expect much more of the entrepreneur than to try their absolute darndest to make it work.
Yeah, I love that. Brilliant. Okay, and if we drill towards the side of the secondary piece, so there's the founder perspective of, we really want to back this team. We see that there is a founder that's going to try their best. There's the secondary side to the potential uplift for you if the company exits. At that point, when you're putting that first ticket in, does that come into your mind, or are you fully focused on, I believe in this person, whatever was going to happen will happen?
You have to obviously feel that making an investment can yield a positive return, clearly.
Yeah.
It's not a philanthropic exercise.
Of course.
Exactly how that will manifest itself, it's so incredibly hard to determine at that first stage that to put numbers on it is a bit meaningless.
Yeah.
You really have to believe, if this works, there is a market that within which a very nice, it might not be IPO material, but a very nice business can actually be created. I think the point around it maybe is, do you need to believe that every investment is going to become Google? I don't think you need to believe that. That's just my own perspective. Others will have a very different view, of course. But I think if there's the prospect of a really nice business arising out of this idea, this market, the dynamics of this market, how it might evolve, the competitive environment, what edge does the technology have, or is the edge in the go-to-market, all of that soup of inputs, you have to have an inherently gut feel that there could be something in this.
Yeah.
For want of a better expression, the first check is a punt.
Yeah.
The second check becomes the more important point.
I love that. So how do you decide on that amount? Let's get more tactical now. How do you decide on that first amount that we're going to put into a company? Obviously, there's the deal structure, whatever. That's just...
Set structuring to one side. The company, it's as a totality, the company needs to be raising an amount of money that actually makes sense to give it a decent chance with the entrepreneur's best endeavors to actually invest in the right areas to prove the thesis that there is something here. As I mentioned earlier, I've seen consistently the theme of that first amount in total has always, fallen a bit short of what really the company would have needed. So it's a reverse calculation, actually. It's what is the total amount, what is the amount of money that the founder is intending to raise? Do I feel that is the appropriate amount of money to prove this thesis out in something like an 18-month period, if it's a really early stage idea? And is the total being raised and the players who are going to participate in that, does A equal B? So for me personally, it can range in any stage from 20 to 50K at that sort of early stage. So by definition, you're looking for a team of investors at that point. So it is start quite small.
Yep.
But as I mentioned earlier, it's the second, the third, and the fourth check that you need to be ready for, because that's actually what success looks like.
Yep.
So back to your example of someone who's going to make one investment in one company, I think that's got high risk of, or high probability of not being successful, because the pattern is invest in several companies in the early stages and then concentrate your investments in those that are showing promise.
And it maybe puts us quite nicely on to the whole topic of dilution. Maybe if we talk dilution. Again, I'm going to go from an angel perspective of someone that's new into the space.
Yep.
How do you ensure that you're putting a ticket in to have enough skin in the game? Obviously, there's multiple rounds of capital and you're going to put multiple tickets in. But how do you factor that in from day one?
You can't. I don't think you can be that scientific about it. Clearly, you need to be investing in that first round at a set of terms that actually make credible sense. So the angel or the angel group is going to have some level of sensible holding in the company, but you need to keep investing in your those that are showing success to keep your shareholding at a sensible level. If for no other reason than to protect your initial investment. It's not absolutely a necessity to invest in every round. You know, in another company where I'm investing, which was touch wood, is doing quite nicely, all of the angels were quite happy to pass on investing in the Series A, because you know, the company had done really well. The company had been particularly capital efficient, so we hadn't needed to invest an amount relative to where the company was. So the terms on the table for the Series A were very decent, and we thought, okay, well, we don't need to invest. So we're quite happy to sit this one out. So it's not a one-size-fits-all answer, excuse me.
Okay.
But you need to be mindful of, unless you keep investing, you will ultimately hold a smaller percentage. But as long as the pie is bigger, if I could use that expression, it still should lead to a decent outcome on your initial investment.
And if we go to the side of SEIS and EIS, how does that factor into your decision of investing?
It's very definitely a factor, for sure. As I mentioned, you know, this is high risk investing. There's make no bones about that. So to be able to invest in a seed or a CDIS eligible company is certainly a good thing. It certainly is an attractive feature for the angel, that there is not only the downside tax protections, but people often forget the no tax on the upside piece as well. And I've been lucky enough that a couple of those have actually worked out. So actually, the no tax on the upside is actually quite nice. But it is an important factor. It's quite rare, in my experience, for an early stage business not to be EIS eligible. The eligibility criteria are quite wide. You kind of have to be doing something a bit funky. I don't do property, for example, which is oftentimes not eligible. But sometimes I've come across companies that believe they don't qualify, but actually when you look into it, they actually do. One example of that is a company had been going a little while and thought they were timed out in terms of being eligible for EIS. But when you look at the fine print, the clock doesn't start when you form the company.
It's trading, isn't
which
it?
is what they had assumed. The clock starts when you make your first, what's called your first commercial sale. I stand corrected if that's not today's tax legislation. This isn't an advice, health warning.
I had that question last week.
But actually we were able to look at with the advisor that I use locally for all that stuff. We looked closely and we said, actually, your first commercial sale wasn't for 4 years. So that reset the clock very dramatically. And then, of course, if you're knowledge intensive, it extends that time period even further. So I think, in my experience at least, it's quite rare for an early stage. I'm tech orientated, as you know, tech orientated business not to be at least EIS eligible. If something is attractive and I really like the founder, it's not a blocker. The structure of the deal might be different. So obviously with EIS, it's a requirement to invest for ordinary shares, and that really aligns founder and angel. But if it's not available, then it's very common for the angel round to be done for preferred shares rather than ordinaries.
It's brilliant because I know some angels that would not invest if there was the tax side. You know, maybe there's a founder that is going to the US or doing safe notes or whatever, and there's no, and people just say no instantly. So it's great to hear, you know, from your side that wouldn't push you away at all.
Of it,
if it's a good team.
Of itself is not a yes or no decision for me.
Okay, good. Another questions arised is I had some angels come to me and say, we've exited a business. We have cash sitting here. We're thinking about our portfolio. We have our pension, we have our ISAs, we have whatnot. And now we're thinking of angel investing. But they are interested in going into SEIS funds, just putting their money into funds versus direct angel investing. What's your thoughts on that?
It depends on where people want to spend their time. If you want to get involved with an early stage company, it's going to take a chunk of time, most likely. And you know, there's nothing wrong with investing in a fund. Many investments and then companies raise money from those funds. So what people's appetite is for what they want to do is very wide ranging. And the good news is the market allows them to participate at whatever stage in the process they want to participate. If they're most comfortable investing in a fund, then fine. But that's just not what everybody does. I don't think there's nothing wrong with one answer versus another.
Would you?
Of course, I would like to encourage them, especially if they've actually exited a business. They have a lot of value to bring to companies, and I think they get a lot more enjoyment out of it rather than receiving the quarterly report from the fund manager or whatever it is. I've never invested in an ES fund or a venture fund for that matter. I've always orientated towards those situations where I like to look the founder in the eye and play a role in the company myself.
Yeah, I spend a lot of time convincing people. Actually, now, if they want to do that, I agree. But there's also a piece of, if they're here, they've exited from Northern Ireland, and they have some time, let's try and figure out a way that they can actually do direct angel investing themselves. But if someone wants to do that, I totally get it.
A halfway house could be to become part of a group that's actually investing in a company.
Or a combination of both.
Or a combination of both. Yeah.
Combination of both, so yeah. Okay, so let's do a little bit of reflecting before we kind of close up a little bit. So we've touched on a few things in terms of if someone wants to start angel investing. One, what should someone do straight away if they're thinking about getting into this high risk piece? And then second part of that question is, if there's three things you could change from your angel investing kind of career, what would they be?
Okay. I'm going to have to speak and try to think at the same time. I'm not a good multitasker.
It's all right.
In terms of getting involved, if I reflect on the ways people can get involved now relative to, say, 10 years ago, 10 years ago was very much a secret club sort of approach. Bill A needed to know B, who might introduce him to C. It was very, I'm not going to say cloak and dagger, but it was really hard for an entrepreneur to find an angel investor to invest in, and likewise quite hard for the angel investors to find the companies. And various attempts, and each have moved the ball down the park a little bit, were made to try to bring those two sides together. The piece that was missing was bringing angels together. What's emerged in the market now is a much more easy way to actually get involved. Obviously, your own HBAN fund is an obvious way for people to at least come to some of the presentation meetings, hear what this is all about, talk to other angels, talk to yourself and others. So there's now routes through which people can actually become part of the ecosystem, for want of a better expression. You've got an angel group within Clarendon Fund Managers called CPIN. You've got Oisin Lappin and the guys at ScaleX doing a fantastic job there, just raised their own fund recently that I saw.
Yeah, that's great.
And Catalyst, Raise Ventures, Ulster Bank, the incubators, which weren't there before, to understand what the ecosystem actually looks like and then become part of it it's a matter of calling people up and saying, could I have a cup of coffee? Because it is very welcoming for people who actually want to think about doing this. So any of those touch points will inevitably get people connected with somebody who will be, I'm sure, very happy to connect them with other people. You know, start small, come to the meetings here. You might need to accept the fact you might need to come to several events or talk to quite a few founders before you find that one that strikes a heartstring, if you like. Say, I actually really like this. I'd like to learn more. So be prepared to invest a bit of time is really, really important. Really important. I've been trying to think of the three things.
Let's maybe do one thing.
Well,
one thing you would change.
One thing I would change, and just reflect me back the question.
So you've invested in a lot of companies now.
Yeah.
If there was something you could change of going through that, what would that be?
And I've mentioned it before, I would very much have acknowledged very early on that this is a team sport. Be part of a group of people who are investing in a business, because that actually has the ability of giving the business or investing in the business an amount of capital that can actually, really enable a founder to really test something out. The problem with testing things out is we run experiments that tend to be too small. You need to do it at scale. There's a lot we can learn from how things are done in the US, not to be cliched about it, but we're learning. I think there's a positive in terms of how Northern Ireland has evolved in the, since 1998. Let me call it then. In many ways, and angel investing and technology entrepreneurship is a big part of it as well. And there are some really, really good things that are happening. It is a highly collaborative network of people with passion who actually want to help founders and get a real personal buzz when they see a founder have success. And that success doesn't necessarily need to mean an exit, but when you see a founder hiring people, when you see a founder getting customers who are prepared to show their trust in that business, to give them money for this thing they have invented, that's an amazing buzz when you see idea come to reality and then somebody, sometimes on the far side of the world, actually say, that's good enough for me to use, I'm going to pay you to use your product. That's really invigorating when you see that actually happen. And when you see it actually grow and flourish and become something significant, that's a big part of the benefit of getting involved in this sort of activity.
I think that's a fabulous place to end. So it is a fantastic piece. It's great to see someone so passionate and be an advocate of the Northern Ireland ecosystem as a whole. So it is. So thank you so much for your time, Michael. I really, really appreciate it. Thank you.
No problem. Happy to, Gary. Thanks.
Thank you. Sorted?